Welcome to the Wall Street Wish List, an investment shopping list from seasoned analysts. And each of the analysts featured today are from Noble Capital Markets, an SEC-registered, FINRA-licensed broker-dealer. Before I introduce the analysts, I want to remind you that this program is provided for informational purposes only, and none of the content should be interpreted as a recommendation or solicitation to buy or sell securities. Investment decisions must be made by you or with the support of your financial advisor. A complete disclosure statement follows each analyst presentation. Let's get going. Mark Reichman is Noble's Senior Equity Analyst covering the natural resources sector. Mark brings 25 years of experience as an equity analyst and has been named Best on the Street by the Wall Street Journal and has been listed as a Best Brokerage Analyst by Forbes based on earnings estimate accuracy and stock recommendation performance. Welcome, Mark Reichman.
Happy holidays. My name is Mark Reichman, and I'm a Senior Research Analyst covering the metals and mining sector for Noble. While our focus tends to be weighted towards small and microcap companies, our research coverage is broad and encompasses everything from exploration companies to developers and producers, and includes exposure to precious metals such as gold and silver, base metals such as copper, nickel, lead, and zinc, along with lithium, rare earths, and coal, both thermal and metallurgical. The holidays are an excellent time to review portfolios and consider new allocations and investment ideas for the coming year. We hope this conference is helpful to your investment process. I have grouped some of our recommendations into several categories. They are, first, companies with stock valuations that are at historically or near 52-week lows. Second, companies with low debt leverage and little need to raise capital. Third, companies with strong cash flow and financial stability. And four, companies with visible near-term catalysts. Along the way, I will highlight our two top investment ideas for 2023. To begin with, 2022 was a challenging year for mining stocks, especially for juniors, and most particularly for explorers. This is largely attributed to the impact that rising interest rates had on the US dollar and on the outlook for economic growth. While gold prices proved to be relatively resilient, base metals prices weakened. While volatility may extend into the first half of 2023, the market could respond to an improving outlook in the second half. Here at Noble, we think periods of weakness often present opportunities for long-term gain versus following the herd and buying when stock prices are expensive. Within our category of companies with stock valuations that are historically or near 52-week lows, I would like to highlight several names. First, Allegiant Gold Limited, which trades on the OTCQX under the symbol AUXXF. Allegiant Gold is a mid-stage exploration company with 10 highly prospective prospects in the Southwest United States, including in the state of Nevada. Allegiant's flagship project is Eastside, a district-scale project in Nevada with an inferred resource of 1.4 million gold and 8.7 million silver ounces of inferred resources with significant potential to add size and scale. Why do I like the stock? Well, Nevada ranked third among 84 mining jurisdictions for investment attractiveness in the 2021 Fraser Institute survey of mining companies. We think Eastside could develop into a multi-million ounce gold resource, representing significant upside potential for shareholders. Management's laid out a compelling plan to significantly expand the resource through the drill bit. The company's drilling programs have resulted in positive results, and in fact, Allegiant just this week released results from its 7-hole, 3,458-meter diamond core drill program within a high-grade zone at Eastside, which affirmed the project's high-grade potential. In the coming months, Allegiant expects to complete additional follow-up drilling and contemplates releasing an updated resource estimate in 2023 to build on the 1.4 million ounces of gold and 8.7 million ounces of silver inferred resources contained in the technical report dated July of 2021. The second name I'd like to highlight is Aurania Resources Limited, trades on the OTCQB under the symbol AUIAF. Aurania Resources is a junior mining exploration company advancing its flagship asset, the Lost Cities Cuticu project in southeastern Ecuador in the province of Morona, Santiago, The project includes 42 mineral exploration concessions encompassing an area of approximately 207,764 hectares. The reason I like the stock is to date, the company has identified 3 distinct types of targets: epithermal gold, porphyry copper, and sediment-hosted copper, silver, and zinc. With such a large land package, what I think would be difficult to replicate today, and an array of targets, they've narrowed their focus to porphyry copper targets and will likely seek joint venture partners for others. Many investors that I speak with are drawn to Aurania because of Dr. Keith Barron, the chairman and CEO, who owns approximately 38% of the shares outstanding and does not draw a salary. Keith has created a lot of value for investors during his career, including the discovery of the Fruta del Norte gold deposit in Ecuador. Aurania recently commenced drilling at the Tatasham porphyry copper target, and we expect the company to drill up to 4 holes for a total of 2,700 meters, or an average depth of 670 meters per hole. And in our view, the Tatasham and AUXXE porphyry copper targets both represent significant discovery potential, with both located immediately north of a highly productive mineralized belt containing significant copper deposits. So key catalysts in 2023 include drilling at Tatasham and AUXXE, prospecting on epithermal gold targets, along with potential strategic investment, partnership, or joint venture agreements. Third name I'd like to highlight is Eskay Mining Corporation, which trades on the OTCQB under the symbol ESKYF. Eskay is an exploration company focused on the exploration and development of precious and base metals along the Eskay Rift in the highly prolific region of northwest British Columbia known as the Golden Triangle, roughly 70 kilometers northwest of Stewart, British Columbia. The company holds mineral tenures in this area comprised of 177 claims, encompassing 52,600 hectares. In our view, the company's consolidated Eskay VMS project offers several inherent advantages, including its location in a favorable mining jurisdiction, proximity to past producing deposits, notably the historic Eskay Creek mine, which was one of the world's highest grade gold deposits, and mineral potential given that its properties surround the historic Eskay Creek mine and represent unexploited ground. We think the company has assembled a superb team with an unparalleled expertise in volcanogenic massive sulfide ore deposits. So Eskay Mining completed 29,500 meters of diamond drilling during its 2022 property-wide exploration and drilling program, and during the past 4 months tested multiple VMS targets, including Jeff North, Scarlet Ridge, Scarlet Valley, and Tarn Lake. Step-out drilling confirmed that semi-massive and massive semi mineralization overlays the entire stockwork at TV, expanding the along strike and down dip extent of mineralization. So we think the company is well on its way toward affirming that its unexploited land package surrounding the prolific past producing Eskay Creek mine may host multiple VMS deposits with significant high-grade gold and silver potential. In short, they're really looking for Eskay Creek 2, 3, and 4. So catalysts for the stock include receipt of assay results from the 2022 drilling program, a greater understanding of some of their target size potential, and development of new targets within the project area to be followed up with a larger and more focused drill program in 2023. While the company is still in exploration mode, we believe resource definition and infill drilling leading to an initial resource at TV Jeff and Scarlet Ridge could coincide with next year's exploration program. Another name I'd like to highlight is Element 79 Gold Corp, which trades over the counter under the ticker ELMGF. Element 79 Gold is a mineral exploration company that's focused on the acquisition, exploration, and development of mining properties for gold and associated metals. The company recently completed a mineral resource estimate for its Maverick Springs project in northeastern Nevada, reflecting an inferred resource of 3.71 million ounces of gold equivalent. The company's portfolio also includes properties along the Battle Mountain Trend in Nevada, which the company is evaluating for exploration sale or spin out, They've already struck some agreements on a few of those properties. And then in Peru, the company holds a 100% interest in the past producing Lucero and Macacala mines. They also in British Columbia have a letter of intent to acquire a private company which holds the option to acquire the Snowbird high-grade gold project, which consists of 10 mineral claims in central British Columbia. So why do I like the stock? When we initiated coverage on Element 79, the title of our report was Getting In on the Ground Floor. While the company has assembled a large portfolio of properties within a short time frame, its emphasis will be on the Maverick Springs project in Nevada, bringing the past producing Macacala mine in Peru back into production while developing Lucero and its Snowbird project in British Columbia. So we think it represents a lot of pathways to create value for shareholders. Management's chief priorities for the remainder of the year and 2023 include raising development capital through the sale of debt, equity, and/or streaming arrangements, exploration of the company's properties in Peru and resuming production to 150 tons per day within 6 to 12 months, resource expansion at the Maverick Springs project, and continued spin-out joint venture and/or sale of projects within Element 79 Gold's development portfolio. Another name I'd like to highlight is Newrange Gold Corp, ticker NRGOF, which trades on the OTCQB. Newrange Gold, headquartered in Vancouver, British Columbia, is a precious metals exploration and development company focused on near to intermediate term production opportunities in Ontario. And in the Red Lake district of northwestern Ontario, the past producing AUXXE gold mine is adjacent to the company's North Birch project. Newrange is renewing its focus on district scale exploration for precious metals in the prolific Red Lake district of northwestern Ontario. Its two 100% owned projects are almost contiguous and comprise 4,454 hectares. The past producing high-grade AUXXE gold mine offers significant potential with prior drilling, indicating that gold mineralization extends below the mine workings and is open to depth, while the adjacent North Birch project offers an attractive folded iron formation setting for gold discovery. Diamond drilling in 2023 could test the down dip extension of veins at AUXXE and follow up on iron formation targets at North Birch. We believe Newrange could be an acquisition candidate for a company seeking projects in the prolific Red Lake district. Now, our next category is companies with low debt leverage and little need to raise capital. And so the first name I'd like to highlight, and is also one of our top picks for 2023, is Maple Gold Mines Limited, which trades on the OTCQB under the ticker MGMLF. Maple Gold Mines is an advanced exploration company in a 50-50 joint venture with Agnico Eagle Mines Limited to jointly advance the district-scale Douay and Joutel gold projects located in the Abitibi Greenstone Belt of Quebec, Canada. The projects represent a large and highly prospective land package encompassing 400 square kilometers, including an existing gold resource with a significant expansion at potential at Douay, along with the past producing Telbel and Eagle mines at Joutel. Maple Gold controls 100% of the Eagle mine. So why I like the stock? Well, we think that Maple Gold represents an emerging world-class gold projects in Quebec's renowned Abitibi gold belt, where there are a lot of large gold mines operating. The company is well capitalized and is focused on establishing a new gold district through resource expansion and new discoveries. Quebec ranks 6th among 84 mining jurisdictions in investment attractiveness in the 2021 Fraser Institute annual survey of mining companies, and is consistently ranked as a favorable mining jurisdiction in terms of its resource endowment and mining-friendly policies. Both Douay and Joutel have multiple styles of mineralization, including deep controlling structures, which are favorable for exploration and discovery of mineralized systems. Maple Gold benefits from several competitive advantages, including a large 400 square kilometer land package in a prime location within the highly ranked mining jurisdiction of Quebec, a growing gold resource with significant expansion potential, an experienced management team, and industry-leading joint venture partner in Agnico. Additionally, it has a strong balance sheet and an enviable roster of institutional investors. So we were on site in November, and we think the company's well on its way toward establishing a multi-million ounce gold camp. 3 rigs are deployed at Maple's 100% controlled Eagle Mine property, where a 5,000 meter phase 3 drill program is expected to be completed by year end. 2 rigs have recently been deployed at Tell Bell, where the company anticipates completing a 6,000 meter drill program by January of 2023. And as rigs become available from Eagle and Tell Bell, they'll be relocated to Douay, and the company anticipates having all 5 drill rigs turning at Douay during the first quarter of 2023 to accelerate a 10,000 meter deep drilling program. So mines in the Abitibi are known for vertical continuity with higher grades at depth. Consequently, there is significant potential to increase average resource grade with higher grade discoveries at depth. As of September 30th, the company had cash of over $15 million Canadian. The next company in this category is Labrador Gold Corp, which trades on the OTCQX under the ticker symbol NKOSF. Labrador Gold is a Canadian-based mineral exploration company focused on the acquisition and exploration of prospective gold projects in Eastern Canada. Labrador is advancing its flagship Kingsway Gold Project in the Gander Gold District in Newfoundland. Why I like the stock is because the company's drilling program, which commenced in 2021, has yielded outstanding assay results among 5 targets tested. These include Big Vein, Midway, Pristine, Golden Glove, and the CSMP target. Labrador released results from recent drilling associated with its 100,000 meter drill program, targeting the Appleton Fault over a 12-kilometer strike length. A total of 61,404 meters have been drilled to date out of the planned 100,000 meter drill program. Assays are pending for samples from approximately 4,263 meters of core, or about 11% of the total submitted. Drilling outcomes have been favorable at both ends of the Big Vein target, while a high-grade zone containing visible gold at Big Vein Southwest continues to demonstrate expansion potential. So 2 drill rigs are deployed at Big Vein to test for extensions of the mineralization to the northeast and southwest. The Big Vein target's been drilled over a strike length of 520 meters and remains open both to the northeast and southwest. The company has approximately $20 million Canadian in cash and is well funded to complete the remaining 39,000 meters of the planned drill program, along with generating additional targets through till sampling and prospecting. Our next category, companies with strong cash flow and financial stability. I'd like to highlight Alliance Resource Partners LP, which trades on the NASDAQ under the ticker ARLP, and is one of my top picks for 2023. Alliance Resource Partners is a diversified natural resource master limited partnerships that generates revenue from the production and marketing of coal and royalty income from coal and oil and gas mineral interests located in strategic producing regions across the United States. Alliance operates 7 mining complexes in the Illinois and Appalachia basins of the United States and is the 2nd largest producer of coal in the eastern United States. Alliance operates as a master limited partnership, MLP, meaning the business is generally not taxed at the federal or state level, with annual income, gains, losses, deductions, or credits passed through to limited partner unit holders. Why I like the stock. If I had to use one word, it's cash flow. For example, Alliance reported 3rd quarter net income of $164.6 million compared to $57.5 million during the prior year period. The company generated EBITDA of $250.2 million compared to $135.9 million during the prior year period, and free cash flow increased to $244.5 million from $120.5 million. 3rd quarter financial results reflected higher coal sales prices and volumes, which increased 40.5% and 8.1% respectively, along with greater oil and gas royalty prices and volumes, which rose 31.6% and 33.1% respectively. Compared to the prior year period, revenues increased 51% to $628.4 million. The company has benefited from strong commodity prices in both its coal and oil and gas segments, so much so that the company recently increased the quarterly cash distribution to 50 cents per unit, or $2 on an annualized basis that was paid in November. The distribution represents a 25% increase compared to the prior quarter. We've assumed the partnership declares a fourth quarter per unit cash distribution of 55 cents. I believe the management team is superb and long tenured. I think Alliance can continue to increase its market share within the coal segment while continuing to grow its oil and gas business and sustain revenue and margin growth through at least 2024. Alliance recently announced the formation of a new ventures team to make strategic investments in energy and infrastructure that promote decarbonization. So the team will identify, develop, and execute commercial opportunities outside of the company's existing businesses to enhance growth and the company's ability to serve the evolving energy needs of the market. The company has a strong balance sheet and reported cash and cash equivalents of $278.5 million and liquidity of almost $745 million at the end of the third quarter. Now we'd like to highlight some companies with visible near-term catalysts. So the first company within this category is Cypress Development Corp, which trades on the OTCQX under the symbol CYDVF. Cypress is a Canadian-based advanced stage lithium exploration company focused on advancing its 100% owned Clayton Valley Lithium project near Silver Peak, Nevada. Cypress intends to mine Nevada claystone, produce a high-grade lithium concentrate solution using a chloride leach process, and apply a licensed direct lithium extraction process based on ion exchange to produce lithium carbonate suitable for tier 1 battery producers supplying the growing electric and battery storage market. Why do I like the stock? Well, very little lithium is produced in North America. Everyone, including the Canadian and United States governments, battery manufacturers, and car makers, are rooting for the success of companies like Cypress Development that can offer secure domestic sources of supply. Clayton Valley offers several competitive advantages, including a large land package in a mining-friendly state, an existing lithium carbonate equivalent resource base, well-developed infrastructure, a direct lithium extraction technology, and leased facilities permitted for pilot testing and secured water rights. We think Clayton Valley could go into production as early as 2025, following the completion of a feasibility study by year-end 2022, a 2-year permitting period, which could begin mid-year 2022. Clayton Valley could go into production as early as 2025, following the completion of a feasibility study by year-end 2022, a 2-year permitting period, along with a 1-year construction period. Based on planned mill throughput of 15,000 tons per day, the current mineral resource could support a mine life of at least 40 years. We've assumed commercial production commences in 2026. Cypress is moving quickly toward affirming the commercial viability of producing lithium carbonate suitable for electric vehicle batteries from Nevada claystone. We cannot understate the importance of having already produced battery-grade lithium carbonate at a 99.9% purity level from Cypress's concentrated lithium solution by using a process that will be incorporated into the processing system design so that it may be produced on site. Cypress expects to complete a plan of operations in the first quarter of 2023 and their feasibility study in the second quarter of 2023. There will likely be significant changes relative to the preliminary feasibility study, including the lithium pricing assumption. While their preliminary feasibility study used a $9,500 US per ton price deck, recent studies seem to be landing in the $20,000 to $30,000 range US, or around $25,000 per ton, which is still well below the current spot price. Of course, cost expectations have risen as well, but I think the net result will be margin improvement. Cypress had about 27 million Canadian in cash at the end of the third quarter, and short-term investments in the amount of 5 million Canadian. The next company I'd like to highlight is Comstock Inc., which trades on the NYSEAMERICAN under the ticker LODE. Comstock innovates technologies that enable systemic decarbonization by efficiently converting underutilized natural resources into renewable fuels and electrification products that contribute to balancing global uses and emissions of carbon. Comstock is commercializing material science-based technologies, products, and processes, including carbon-neutral cellulosic biofuels and lithium-ion battery metal recycling. The company also manages an extensive portfolio of mining and related assets, including 9,358 acres of contiguous property in the historic Comstock and Silver City mining districts in Nevada. Comstock experienced a very productive third quarter, is making significant headway in advancing projects within its battery recycling and cellulosic fuels businesses. While most of the company's focus has been on advancing its battery recycling and cellulosic fuels businesses, the recent technical reports for both Dayton and Lucerne mineral properties highlight the resource potential and value of its mining assets. Key near-term catalysts include monetizing non-core assets, announcing strategic partnerships and offtake agreements within cellulosic fuels, receipt of an air quality permit for its battery recycling business, and achieving development and deployment milestones. Another company with catalysts on the horizon is Defense Metals Corp, which trades on the OTCQB under the ticker DFMTF. Defense Metals is an exploration and development stage company engaged in the exploration of mineral properties whose flagship project is the 100% owned Wichita rare earth element deposit located near Prince George, British Columbia, Canada. The reason we like the stock is I think this one closely parallels Cypress development and that everyone is cheering for secure supplies of rare earths outside of China. In January of 2022, Defense Metals released a preliminary economic assessment which highlighted 5 million tons of indicated resources averaging about 2.95% total rare earth oxides and 29.5 million tons of inferred resources averaging 1.83% total rare earth oxides. The study affirmed the economic value of advancing the project based on significant resource potential, favorable metallurgical recoveries, and attractive return potential. So current resources are based on approximately 4,000 meters of drilling and do not include the results from Defense Metals' 2021 drilling program that entailed over 5,300 meters of drilling. And so along with data from the 2021 diamond drill program, results from the 22 drilling program will be incorporated into a preliminary feasibility study, which is expected to be completed by the fourth quarter of 2023. So in addition to significant potential to expand the resource and extend the mine life beyond 19 years, we expect grade enhancement and a meaningful conversion of inferred to indicated and potentially measured resources. The 2022 resource infill drilling continues to yield high-grade rare earth element intercepts from surface exceeding 3%. The recent drill results are significant in that they represent the deepest drilling to date to test the Wichita deposit, yielding a broad mixed interval averaging nearly 2 times the mineral resource cutoff grade, ending 50 meters below the current pit shell. So with over 5,500 meters of drilling and 18 holes completed as part of the 2022 program, Defense Metals has released assay results for 8 holes, and results for the remaining 10 holes are expected to be completed in the coming weeks and months. Next company in this category is Garibaldi Resources, which trades over the counter under the ticker GGIF. Garibaldi Resources Corp is a Canadian-based exploration stage company. They basically are advancing their flagship ENL Nickel Mountain project, which represents the first magmatic nickel, copper, cobalt, PGE-rich massive sulfide system identified in the Eskay camp. So the company is also advancing the Casper discovery, which is a gold vein that's 12 kilometers northwest of Nickel Mountain. I think this stock would really be of interest to investors that are seeking exposure to both base and precious metals. They have basically 180 square kilometers of mining claims in the mineral-rich Eskay camp in northwest British Columbia. And I think down the road, Garibaldi could become a promising acquisition target by a larger mining concern as the mineral potential of its mining claims becomes more apparent. The 2022 drill program at ENL tested targets from the 2021 electromagnetic survey. And so of 4 holes drilled, 2 were successful and 2 were unsuccessful. So they're planning to do a geophysical borehole survey to better plan future drill holes. I think in 2023, the drill program could commence as early as June or July and entail roughly 3 to 4 holes at the ENL target, 2 holes of approximately 500 meters depth at the B1 target, and 2 holes at the Palm Springs property. Drilling at ENL will focus on areas of greater conductivity within one of the anomalies that was tested in 2022. So I think Garibaldi is unique because it offers exposure to high-value metals that play a critical role in clean air and battery technologies, along with precious metals. We think 2023 could be an eventful year, building on the 2022 drilling program in ENL, along with new discovery potential at the B1 target. LithiumBank Resources Corp, which trades on the OTCQX under the symbol LBNKF, is an exploration development company focused on lithium-enriched brine projects in Western Canada, where low-impact direct lithium extraction technology can be deployed. LithiumBank's mineral titles are strategically positioned over known reservoirs that provide a unique combination of scale, grade, and flow rates required for large-scale direct brine lithium production. LithiumBank is advancing and de-risking several projects in parallel with the Boardwalk Lithium Brine project. So why do I like the stock? Well, the company secured over 4 million acres of mineral titles, including 3.7 million acres in Alberta, and about 326,000 acres in Saskatchewan. They're advancing their flagship Boardwalk Lithium Brine project and developing several other projects, notably Park Place and Kindersley, in parallel. The company expects to complete a preliminary economic assessment for Boardwalk by year-end 2022, which is coming up, to be published in early 2023. And the Boardwalk PEA, or preliminary economic assessment, will incorporate direct lithium extraction, and the company has engaged Hatch, a well-known engineering firm, to design, test, and manage their direct lithium extraction programs. So we think the Boardwalk project offers several competitive advantages, including a large land package and a business-friendly jurisdiction, a large lithium carbonate equivalent resource base, and well-developed infrastructure. Once Boardwalk commences production, we forecast it to produce approximately 30,400 tons of lithium carbonate equivalent annually over a 20-year life. Located immediately south of Boardwalk, the Park Place project encompasses 1.6 million acres of contiguous ground, and so a hydrogeological study is underway and is expected to be incorporated into a maiden resource estimate in the first half of 2023, with a preliminary economic assessment in the second half of 2023. So at least 3 more resource estimates are planned by year-end 2023, with the goal of delineating at least 10 million tons of lithium carbonate equivalent. So we think LithiumBank is well positioned to benefit from growing demand for lithium hydroxide for lithium-ion batteries used in electric vehicles, grid storage, and portable electronic equipment. So just to reiterate the upcoming catalysts: Boardwalk preliminary economic assessment by year-end 2022, preliminary feasibility study in the second half of 2023, Park Place mineral resource estimate in the first half of 2023, and preliminary economic assessment in the second half of 2023, a Kindersley resource estimate in the first half of 2023, and preliminary economic assessment in the second half of 2023, and then a DLE field pilot plant in 2023. So a lot of catalysts on the horizon for LithiumBank Resources. So there you have it. I want to thank you for your attention and hope that at least a few of these recommendations piqued your interest. Our research library of research coverage initiation reports and subsequent research updates are archived by date and available on channelcheck.com. Best wishes for an enjoyable holiday season and prosperous 2023. I'm now happy to take any questions.
All right, Mark, thank you for that. We've got a few questions here. We'll start off with one regarding Maple Gold. The question is, does Maple Gold have a resource and who owns what?
Well, the 50-50 joint venture with Agnico Eagle includes the Douay property, which has an existing resource of 3,036,000 gold ounces, and the past producing Tellbell mine, which is part of the Jutel project. The past producing Eagle mine, which is also considered part of Jutel, is 100% owned by Maple Gold. Now, we think it's likely that at some point the Eagle mine could be rolled into the joint venture. Maple Gold's goal is to grow its resource to over 5 million gold ounces. Maple Gold's 50% share of the pit-constrained resource at Douay is roughly 1,518,000 gold ounces. So on a near-term basis, the company is considering strategic acquisitions to increase its attributable resource portfolio. And we think there may be opportunities for financially strong companies like Maple to acquire resources on an accretive basis. And we think it's likely that the company will maintain its focus within or near the Abitibi Gold Belt.
All right, so we've got a couple questions here regarding Alliance Resource Partners. And the first one is, what is the level of visibility on earnings for 2023?
Well, earnings visibility is very strong. During the third quarter, Alliance was able to execute new coal sales commitments for delivery of 5.6 million tons through 2025 at prices supporting higher margins. Management had noted that with the company being sold out for this year and with a contracted coal sales volume in 2023 and 2024, that the outlook for cash flow growth appears very favorable. Committed and priced sales tons are roughly 35.9 million in 2022, almost 33 million tons in 2023, and I believe around 23 million in 2024. The company also added a fifth mining unit at the Skipson South mine, and then expects to add another development unit at the Hamilton mine by the end of this year or early next. And I think on the last call, they had mentioned that, that they might expect to see a price per ton increase next year, somewhere in the neighborhood of $10 a ton. So that would be, that would be significant. So we think that with these commitments, they should benefit from higher coal volumes and margins over the next several years. And so we do think the outlook looks very bright for Alliance.
All right, now another one on Alliance here. It says you mentioned Alliance Resource Partners' strong cash flow. What are they doing with it?
Well, several things really. First, I mean, they've been returning capital to shareholders in the form of quarterly cash distributions. As we mentioned earlier, the most recent distribution represented a 150% increase over the cash distribution of 20 cents for the quarter ended September 30th of 2021, and then a 25% increase over the cash distribution of 40 cents per unit for the quarter ended in June of 2022. So we expect another increase in the fourth quarter, although at some point, they could pivot to returning capital in the form of special distributions, just basically to ensure that the regular distribution is sustainable. I mean, just given, you do have some volatility in commodity prices, and they've been, steadily raising that distribution, but at some point they may decide to start, returning capital in the form of special distributions. I also think they'll continue to invest in their business to maintain their low cost position. I mean, for example, the acquisition of additional reserves adjacent to their very low cost Tunnel Ridge mine, and then accessing a lower cost, higher yielding coal seam, which is next to or adjacent to the Riverview mine. Those will both provide cost savings and increased production capacity beginning in 2025. I think we mentioned the 2 new production units in the Illinois Basin will benefit production next year. And I think they'll commit capital to expand their oil and gas segment, based on whatever cash flow it generates. They also have their new ventures group that is continuing to evaluate investments not related to either coal and gas, which would provide future growth. And I think they may consider debt repayments as they have a $400 million senior unsecured note that matures in May of 2025. And on their oil and gas business, I mean, they did announce an acquisition this last quarter. So they have been making acquisitions and growing, their oil and gas business. So I think I think they spent roughly $95 million and acquired additional oil and gas royalty acres in the Permian Basin, where there were like 1,200 producing wells and about 100 to be completed, and then more permitted locations. So that should support future oil and gas production growth. So those are the kind of give you an idea of what the company is how they're allocating their capital and using their cash flow.
All right, excellent. So this last one is kind of a methodology question, but it does pertain to two of the companies you mentioned. So I'll just read the question for you. It says the lithium projects being advanced by Cypress and LithiumBank look interesting. Is direct lithium extraction competitive with conventional methods?
Well, most of the lithium today is produced from brine, and evaporated to produce lithium carbonate, along with hard rock mining to produce a spodumene concentrate. So cash costs of producing from brine typically run anywhere from $2,500 to $4,000 a ton. For hard rock mining, it can be, $6,000 or more per ton. So employing direct lithium extraction from Nevada claystone, that kind of generally falls somewhere in the middle. Direct lithium extraction technologies are a whole other interesting area. They're evolving and the costs could come down. As we see in LithiumBank Resources case, DLE will be used, to extract lithium from brine, sourced from the LeDuc formation through oil and gas wells. And so there's a lot of new things going on, which I think is very exciting. And what I would say is, this direct lithium extraction, I think the process tends to be faster, than these large evaporation ponds where you're evaporating it. Versus also there can be some real economic or environmental benefits as well. For example, in Cypress's case, they're going to be using solar or geothermal energy, so they're kind of designing their process so it uses less water and is has maybe a less invasive footprint. And so I think there's some real benefits, environmentally and even cost-wise and efficiency with direct lithium extraction. But I think we're gonna really, that whole area is really going to blossom. And so I think it's important for investors to kind of keep an eye on it.
All right, excellent. Well, that's all the time that we have today. Mark, I want to thank you for this very informative presentation today.
Thank you.